Hey everybody, welcome back. So today I'm going to be talking about Iron Condors. And Iron Condor is a strategy that works really well for stocks that trade generally more sideways. And even if they do have more volatility, that's fine. It's just good to take a look at the moving averages. If the moving average of the stock has been trading pretty flat and you think it's going to be trading relatively flat in the next couple of weeks, then that is perfectly fine to trade an Iron Condor. You can really make a big profit from a really low collateral for the amount you have to put up, for the amount you have to risk to lose. So you can make literally 10, 15, 20 times the amount of money you risk to place this trade. Okay, so we're going to take a look at three companies that I think will be really interesting, Iron Condor strategies to trade on. And so the first stock ticker we're going to take a look at. And just before I get to this, just make sure you smash the like button if you do like this content. If I do provide any kind of value, if you learned something, just comment below, subscribe. I really appreciate that. So without further ado, taking a look at the first stock ticker, AAL, so American Airlines Group. If you take a look at Yahoo Finance, you can actually type in the symbol and it'll pull up a lot of different information. In this case, we're just taking a look at some of the charts, specifically the Bollinger Bands. So with AAL, AAL has been trading really quite sideways in the last couple of months, despite all the the news about the different variants and different coronavirus, the Omicron and all that. So for the most part, I think AAL is a pretty good stock to trade Iron Condors. And I usually also like to take a look at Finviz.com just to kind of take a look at some of the RSI. So right now does look like it is oversold. And so we're not going to really take a look too much into the other information. This would be good for if you're invested long term, if you're buying leaps, or if you're just buying shares of the company. But in this case, I just like to take a look at some of the moving averages and then the RSI. Okay, so going into our Robinhood account, I'm going to show you how this trade looks like. So we're going to do trade AAL options. And usually I like to set expirations to about a week out. So it can be even a few days out. But the shorter the expiration, that really it is more in your favor because the time decay is really on your side. So you want this to expire basically where you set your strike prices at. So I'm going to show you what that looks like. So in order to open up an Iron Condor, first you have to open up a put credit spread. And we do that by first buying a put and then selling a put at a higher strike price. Okay, so that way we would collect a credit. So normally this would be fine, right? But we don't really know if it's going to go down or up. Okay, so this put credit spread just basically means that the stock can go down 2.67%, and then you would collect the entire $19 profit. If it goes beyond 2.92% down, then you will lose $31. And now we're going to go into the call side of things, and we're going to basically sell call credit spread. Okay, so with the same expiration date, we're going to buy, we're going to sell a call and then buy a call at a higher strike price. Okay, so now you have this sort of plateau set up, and this just basically means that the stock can go up 2.5%, and it can go down about 3 and almost 0.5%, and you would make $36. Okay, the max loss would be only $14. Okay, so that's the Iron Condor. Let me show you a slightly more interesting trade also you can do, which is just the butterfly. So we would go ahead and sell the call option. Okay, I'm going to sell above the strike price 1, and then I'm going to buy a call above the strike price that I selected to sell, and then below the strike price. Now I'm going to go to my custom, and I'm going to set a custom ratio, and I'm just going to sell 2 call options of the same call option I selected. Okay, so as you can see now, the stock can go up to 1% and it'll maximize the profit. But if it stays within the 3% range and the negative 1% range, we will make $41 off of a max loss of $9. That is insane profit margin for amount of collateral we're risking. Okay, so I really don't think AALs can fall that much lower. It's falling quite a bit, so that's why I think it's a pretty good chance the stock may just move slightly up in the next week or so. And if I open 10 contracts, then I could be potentially making $440 or $404 off of risking $90. Okay, so that's one way that's one stock that I'm looking at to trade either iron condors or butterflies. The other stock ticker that is pretty interesting is stock ticker CI. Okay, so Cigna. Let me just show you some of the Bollinger Bands on Cigna. So Cigna has also been trading relatively sideways in the last, just really the last couple months. So as you can see, it's been trading pretty consistently. Taking a look at the Bollinger Bands, same thing. Just taking a quick look at Finviz as well. I just want to see what the RSI is. So we can see that RSI is at 32.73. That means it is oversold. This is really, honestly, a good company to buy just shares, sell puts, sell put credit spreads, just because it's a solid company that has just been down quite a bit in the last couple of months. I do think eventually there is going to be some kind of recovery for Cigna. So just all around, I think it's a great company to be invested in. But let me show you what that looks like with iron condors. So we would do trade Cigna options. Okay, so we would go ahead and set up our credit spread. So we buy our put, and then we can sell our higher strike price put. Okay, so right there, I think is already a great trade because this would allow Cigna to continue to go down 2.85% before you lose money on this trade. But if it stays above that, anything above 194, then you would be making a profit of $108, which I think, in my opinion, is really a solid trade. But let's just kind of see what it looks like on the call side of things. So we're going to do buy a call. Okay, and then we're going to sell the call first. And remember, we have to keep the strike prices even. So the put credit spread I opened was 2 and 3 below. So I'm going to do 2 and 3 above. I'm going to sell a call and buy a call 3 above. Okay, so look at that. That's pretty amazing, right? So Cigna can go down another 3%, which I don't think it is, but it can also go up about 2%. And if it stays within that range in just next week, our max profit is $218 and our max loss is only $32. I think that's a really, really good play because Cigna has really been trading pretty sideways. And so if you can imagine opening up 10 contracts, right, you're risking $300 for potentially making $2,100, $2,100. Okay, so that's another interesting trade I would be definitely taking a look at. The last stock ticker, this is just a little more interesting, is ATVI. Okay, so ATVI is a relatively volatile stock. Well, okay, so this is how I put it. It's been down quite a bit, right? If you take a look at some of the charts, Blizzard has just been down due to allegations, but I think it's still a solid company with a lot of potential. So, I do think it's going to trade sideways for a little bit, at least in the near term future, just because there's not really a lot of catalysts that I see that would really move the stock that much. So the way that you can trade, and just taking a look at the RSI, so ATVI. Okay, again, it's RSI is 24.91, so that means it is oversold. So let's take a look at what this would look like trading ATVI, Blizzard. Okay, so we would go ahead and set our put credit spread, so buy a put. and we would sell the put at a higher strike price. Okay, and then we would go ahead and set up our calls. So buy a call and sell a call at the strike price below. Okay, so over here, it can go down to 3%, or it can go up. Oops. Yeah, it can go up 3% before we would lose money. Okay, so we could make $48 off of risking $52. Now, how this will look like on the on a butterfly spread is we'll go ahead and buy a call, sell a call, and then buy a call, one strike above, buy a call, one strike below, and set our custom ratio to selling 2 options. Okay. Oops, did I mess up somewhere? Buy a call, 61. Oh. Okay, that's pretty interesting, but yeah, essentially the stock goes up, we would profit, and then if the stock goes down, furthermore, then we lose $33. But we're risking $33 to make $67 on this particular trade. So I think this is a great bet because I do think ATVI is going to be either it's trading sideways or going up in the near-term future. Okay, so you can really do this with quite different different stocks. One other stock I'm taking a look at just as bonus is PayPal. PayPal has been down quite a bit in the last couple months, but if you take a look at doing an Iron Condor, I do think this will be a pretty profitable trade. We can do we can buy the put, we can open a credit spread option. Again, this already would be great because I don't think PayPal can fall even more. I mean, it can, but I don't think it's very likely. And then going into the call side of things, buy a call, sell a call. Okay, so this really allows for PayPal to move down about 3% and go up about 2%. And if it stays within that range, you're going to profit $174 with a max loss of $76. Of all the trades, honestly, I think Cigna is one of the better ones because it's such a consistent stock. It's been trading so sideways in the last couple months. I do think I would lean more towards on the bullish side of things, just because I really think this stock is not going to fall that much more. So if I were to open up a butterfly spread, I would sell a call above the strike price, and then we would go from there. Okay, so you customize it, open up 2 of the call spreads, and look at that. Okay, so this is a little bit off because right now I'm not trading during market hours, but you kind of get the point, right? If it goes up 1% or if it moves down 1%, you will make $275. I don't know the max loss, but you will pretty much be making a whole lot of money for making a trade that on a stock that moves sideways. Okay, again, if you like this content, make sure you smash that like button, subscribe, comment below if you have any questions. Until next time, guys, I will see you then.